Hey everyone, and welcome to the AI Tech channel. Today we're diving into a massive, potentially revolutionary idea from none other than Elon Musk. What if the US government ran on blockchain? Could this be the key to unlocking unprecedented transparency and efficiency, or is it just another pie-in-the-sky tech fantasy? Prepare for a wild ride as we unpack Musk's audacious plan. Is this the dawn of a new era of government, or are we heading for a digital disaster? Let's get started. Elon Musk, never one to shy away from bold ideas, is reportedly considering integrating blockchain technology into the very fabric of U.S. government operations. According to a January report by Bloomberg, sources familiar with the discussions, though not officially confirmed, suggest Musk's keen interest in exploring a blockchain-based government system. Think about it. Every transaction, every expenditure, recorded on an immutable, transparent ledger. It's a radical concept with the potential to reshape how our government functions. This news has ignited a firestorm of excitement within the crypto community, with prominent figures like Coinbase CEO Brian Armstrong and Binance Changpeng Zhao passionately advocating for transparent government spending through blockchain. They envision a future where every dollar spent is tracked and auditable on-chain, eliminating corruption and waste. But how realistic is this vision? The crypto community is buzzing with excitement over the prospect of blockchain-powered governance. Armstrong imagines a future where every government expenditure was done transparently on-chain. Zhao echoes this sentiment, believing all government spending should be tracked on an immutable, public ledger. This isn't just about abstract ideals. It's about practical improvements in accountability and efficiency. Imagine being able to see exactly where your tax dollars are going in real time. The discussion has also sparked speculation about which American blockchain platforms might be involved, with names like Solana Foundation and Ripple among the contenders. But selecting the right platform is crucial. It needs to be scalable, secure, and capable of handling the immense volume of government transactions. This is where the real challenges begin. Musk isn't the first to consider blockchain for government. He might draw inspiration from the European Blockchain Services Infrastructure, or EBSI. Launched in 2018, EBSI is a collaborative project between the European Blockchain Partnership and the European Commission. Its goal is to develop cross-border services using blockchain to ensure trustworthy verification processes. Unlike Estonia's more centralized approach, EBSI operates through a decentralized nodal structure, where each member state contributes to the blockchain, enhancing both transparency and autonomy. This decentralized model could be a key to success in the U.S., ensuring that no single entity controls the system. However, scaling a decentralized system to the size of the U.S. government presents significant technical hurdles. We're talking about potentially millions of transactions per day. Let's get real about the technical challenges. Scalability is a major concern. Can blockchain technology handle the sheer volume of transactions that the U.S. government processes daily? Current blockchain networks like Bitcoin and Ethereum struggle with transaction speeds and fees. To handle government operations, we'd need a blockchain capable of processing thousands, if not millions, of transactions per second. This requires advanced technologies like sharding and Layer 2 scaling solutions. Interoperability is another hurdle. The U.S. government uses a patchwork of legacy systems, many of which are outdated and incompatible with each other. Integrating blockchain with these existing systems would be a monumental task, requiring significant investment and expertise. Think of it as trying to connect a brand new Tesla to a horse-drawn carriage. Beyond the technical hurdles, there's the political reality. Shifting from traditional, often opaque systems to a transparent blockchain framework could face fierce resistance from entrenched bureaucratic interests. Imagine government agencies suddenly having to open their books to the public. There would be powerful forces pushing back against such a radical change. Furthermore, there are legitimate concerns about where blockchain may not be suitable, such as in handling national security data. Balancing transparency with security is a delicate act. We need to ensure that sensitive information is protected from unauthorized access while still maintaining accountability. This requires careful consideration of which data should be stored on the blockchain and which should be kept private. Now, let's address the elephant in the room: Elon Musk's potential conflicts of interest. As the richest man on Earth, Musk has a wide and deep range of potential conflicts with the federal government, perhaps more than anyone else in history. He owns, directs, or invests in a wide array of industries, touching dozens of departments and agencies, from the Department of Transportation with Tesla to the Department of Defense with SpaceX to the Department of Health and Human Services with Neuralink. His companies are the subject of federal investigations and regulatory actions, including accusations of hiring discrimination, environmental damage, and safety deficiencies. Can Musk truly be an impartial advisor on government efficiency when his own companies stand to benefit or be harmed by government policies? This is a question that demands serious scrutiny. Let's drill down into some specific examples. Tesla, where Musk serves as CEO, is worth $1.25 trillion today, more than every other publicly traded car company in America combined. This valuation hinges on expectations about how the company will be regulated and how car companies are taxed or subsidized. The National Highway Traffic Safety Administration has been investigating Tesla's autopilot system since August 2021. A report released in April said the autopilot design led to foreseeable misuse and avoidable crashes, and attributed 13 fatal crashes to Tesla's self-driving feature and its abuse. Cuts made to the NHTSA staff could directly affect those investigations. More pointedly, threats of cuts to NHTSA might influence current investigations in a bid to curry favor. This raises serious concerns about whether Musk's recommendations could be influenced by his desire to protect Tesla from regulatory scrutiny. Then there's SpaceX. The market value of Musk's SpaceX, which is privately owned, has doubled over the last year by some estimates to $350 billion. Musk has had additional run-ins with the NLRB through his SpaceX rocket and satellite services company. After Musk fired SpaceX employees who had been publicly critical of him, the NLRB ruled them illegal firings. SpaceX has received more than $15 billion in federal government contracts since Musk took charge. It is seeking billions more from NASA for its mission to the moon, from the Department of Defense for satellite communication services, and from the Federal Communications Commission to provide rural broadband services through its Starlink subsidiary. How can we be sure that Musk's recommendations for government efficiency aren't simply designed to funnel more money toward SpaceX? Musk's purchase of Twitter, now X, also raises concerns. X has lost billions of dollars in market value as advertisers and users flee the platform's unmoderated forum. One path to profitability would be by exploiting user data. A change to its terms of service shortly after the election informed users that it would sell user data to third parties for the purposes of training artificial intelligence models. These kinds of sales have become a focus for the Consumer Financial Protection Bureau, a government watchdog. Musk's recent post calling for Trump to delete CFPB as wasteful government spending suggests he believes it might be a threat to his business interests. Could Musk's recommendations for government efficiency be aimed at weakening regulatory bodies that oversee his companies? While Musk is exploring blockchain for governance, the crypto market itself faces challenges. JP Morgan Chase recently reported that Bitcoin and other cryptocurrencies are suffering from weak demand and a lack of positive catalysts. This has led to a slump in prices for major cryptocurrencies. The bank suggests that institutional investors taking profits and a lack of near-term catalysts are contributing to the weakness. Lower demand from momentum-driven funds is also likely impacting demand. This highlights the volatility and uncertainty that still plague the crypto market, even as it gains increasing attention from governments and corporations. It's a reminder that blockchain technology, while promising, is not without its risks. Despite the overall market weakness, there was some positive news for the crypto sector, with exchange Coinbase Global announcing that the U.S. Securities and Exchange Commission has dropped its enforcement case against the company. Analysts say dismissal of the Coinbase case will have long-term positive ramifications for other crypto enforcement cases and the industry as a whole. This could signal a more favorable regulatory environment for the crypto industry in the future, potentially paving the way for greater adoption of blockchain technology by governments and businesses. Elon Musk is reportedly considering using blockchain technology at the Department of Government Efficiency, DOGE. Created amid President Trump's flurry of executive orders, DOGE's goal is to update federal software and technology to boost efficiency and productivity within the federal government. The group is expected to make its recommendations for cuts by July 4, 2026. The discussions have involved the use of a blockchain to monitor federal spending, make payments, secure data, and manage government buildings. One source told Bloomberg that people connected to DOGE have met with representatives of public blockchains to evaluate their technology. This is a crucial step in determining whether blockchain is a viable solution for government operations. However, the success of this initiative will depend on addressing the technical, political, and ethical challenges we've discussed. Musk's proposal signals a growing interest in applying blockchain technology at the highest levels of government. Blockchain offers the potential to increase transparency, reduce corruption, and streamline government processes. However, it also presents significant challenges, including scalability, interoperability, political resistance, and ethical concerns. The success of this initiative will depend on addressing these challenges effectively and ensuring that blockchain is used responsibly and ethically. We need to carefully weigh the potential benefits against the risks and ensure that the technology serves the public interest. So, will Elon Musk's blockchain revolution transform the U.S. government? The answer is complex and uncertain. While blockchain offers immense potential, it's not a magic bullet. Overcoming the technical and political hurdles will require significant effort and collaboration, and we must be vigilant about potential conflicts of interest and ethical concerns. This isn't just about technology. It's about governance, transparency, and accountability. What do you think? Is blockchain the future of government, or is it just another overhyped tech trend? Let us know your thoughts in the comments below. And don't forget to subscribe to the AI Tech channel for more in-depth analysis of the latest tech trends. Thanks for watching.